Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we recap the USDA reports for January, plenty of surprises were seen in those reports. With us here today, Kevin McNew, Chief Economist, Farmers Business Network. And Kevin, Happy New Year to you, sir. Good to catch up with you again.
Happy New Year, Jesse. Good to see you again.
Well, you know, Kevin, we were chatting before we jumped on the air here. What a way to kick off the new year. Plenty of surprises with those USDA numbers. Man, you know, I don't really know where to start, so I guess I will throw this at you. Out of the surprises, what stood out to you the most with the numbers that USDA gave us for January?
Yeah, so I think I mean, there was a lot of surprises, and I think really the surprise was the lack of downgrade in stocks. You know, stocks were expected to move up, and they either kind of stayed where they were, moved down slightly, and so that was very bullish. Corn and beans reacting very positively. As I sift through the numbers, what stood out to me was just how bad the corn situation was in the U.S. this year. We finally got some realization of that from USDA, not in the form of yield, because yield actually went up, but what actually happened was they really took a hammer to harvested acres, and that's where we lost the production. And so when you look across all of the different states, Kansas off 700,000 acres from what we had in November, Texas, Colorado, all the areas we've been talking about in terms of drought, they finally got square on how bad that was in terms of cutting harvested acres. So that was the wild card that got the corn market excited. Not that we, you know, had a yield downgrade, and certainly the exports have been bad, and we reflected that. But you know, I think it's endemic of what we've been seeing this fall and winter, which was basis in those areas were off the charts, and you just had to scratch your head and go, why? And now we know. So that was kind of the big one. Winter wheat, big surprise there to the negative. You know, bigger plantings in winter wheat. The real surprise, as you look at the state-by-state breakdown, was Texas. The largest winter wheat acres in Texas in 33 years. You got to go back to 1990. It's just unprecedented. So it really caught everyone in the trade by surprise. Big winter wheat numbers. But right now, you know, corn, beans are leading, you know, doing a happy dance. It's been a pretty lethargic 3 or 4 months. You know, South America, we got the downgrades, a little more than maybe what we expected. But Argentina, it's a mess. You know, the precipitation's not showing up. It's been super hot. Brazil's okay, you know, but we're going to see some downgrades in Argentina, which supports as well.
I was going to say, with those South American numbers, were you surprised USDA was as aggressive as they were with the Argentine numbers? I know we had the Rosario Grain Exchange numbers out late Wednesday. I don't know. I guess I wasn't surprised, considering USDA has been known to throw us some surprises here in recent months. What are your thoughts there? Were you surprised at all with the cut that they made?
Yeah, I'm like you, Jesse. It's like, maybe they'll get aggressive, maybe they won't. I mean, I think, you know, we just keep watching the weather down there. We keep watching the satellite imagery, and it's just not good. So, I mean, yeah, I think they were justified in being aggressive here. You know, I think as I kind of look more broadly, I mean, like I said, with corn, you know, we got the reflection of exports are weak, and they, you know, USDA downgraded exports. What I see that's kind of shifting in the balance here is the US dollar has been moving in the right direction for farmers. In other words, it's been going down really since October. And that was because we sort of saw inflation backing down. We thought interest rates were probably going to, you know, they needed to make another leap up, which they did. But the US dollar has been correcting course. And I think that could bode well for us in corn exports in the coming months. Clearly, Brazil they ate our lunch. I don't know how else to say it other than, between the Mississippi River debacle, the strong U.S. dollar in the fall, we had zero game for exports in corn. And maybe that starts to shift in the next 3 to 6 months, which I think helps support corn as well.
Well, Kevin, I know you authored a global grain markets outlook that FBN released ahead of the USDA numbers on Thursday. As you look at the USDA numbers, how did that correlate to what you're seeing in that outlook report that you guys released as well on Thursday?
Yeah, I think what our takeaway from the global grains discussion was really this, that, over the last decade, we have seen a supply growth from the world in terms of agricultural supply. Agricultural supply has been slowing down relative to demand. And that's kind of the first time we've seen that really you got to go back to the 50s. In the 50s, that's kind of when hybridization happened. That's when irrigation and commercial fertilization, all this kind of green revolution movement started in earnest in the 50s. And that led to ag supply growth globally, really growing quite readily and keeping pace, or at least doing better than kind of demand growth. And for the last decade, that trend is reversed. We now see demand for corn, wheat, soybeans outstripping supply growth. Maybe not in a given year, but the trend from year to year is shifting. And so my message to farmers in this time is that, the prices we see today are likely not going to turn sharply lower. That we're in a world where demand is outstripping supply in terms of growth potential, and that's a struggle for prices to kind of keep up and keep moving higher. So I think that's the good side of farming. The bad side of farming is going to be the cost side. I don't see costs breaking too much in 23. They'll break a little bit. We're seeing some downgrades in fertilizer. Natural gas has certainly come down in the last couple of weeks, which should help anhydrous and nitrogen prices. But we're not going to get anywhere close to where we were, say, in 21. So, your costs might be a little better in 23, but don't expect wholesale improvements in 23. So, I think, profitability will be, a little challenging, but I still think there's profits to be made there.
Well, Kevin, I think overall, as we kind of set the table here for now, the year ahead, I wonder what some of these numbers, as we look at the markets moving forward, kind of crystal ball, what's that going to do for this acreage battle? Because that's going to be a big discussion here, I think, the next couple of weeks and months ahead as we near spring planting in the U.S., Kevin.
Yeah, absolutely. We did a kind of fall-based acreage intention survey with our farmers. I would say at that time, there wasn't a big lean to growing more corn or beans. Where we did see corn acres kind of going up was in the northern plains, where they'd had some struggles last spring. But overall, I think it's going to be, maybe about the same. I do think, the wheat bean double crop situation could be, a power play. So we could see bean acres climb. We did see soft red winter wheat in Illinois, Indiana, Kentucky, all those kind of areas where you can potentially now double crop. So I do think bean acres have the potential to move up, but farmers love their corn. So, I'll reserve judgment till we get closer to March.
Very true.
To see what farmers are thinking.
Yeah, very, very true. Kevin, before I let you go, any final thoughts you have for us here today, just as we take a look at all the data that is now in front of us?
Yeah, I think this is a good thing. It's nice to start the year with some positive inputs. We haven't really had much positive to talk about in the last 3 or 4 months. And I think this is, maybe the start of some more positive developments. And we need the markets to kind of do some work here as we get into spring. And so I think this is a good thing. Don't fall asleep on your marketing strategies. But I think this is maybe the life we needed to see in the markets here.
Well, I know folks can learn more about Farmers Business Network, FBN, by going online, fbn.com. With that, FBN Chief Economist Kevin McNew, thanks for the time today, as always. We'll talk to you again soon.
Thank you, Jesse.